Hello everybody, welcome back to Financial Trading Basics Part 35, Market Minutes 4. Another great, fantastic financial episode today. We have a pandemic ending, we have a war raging on. So 2022 has just been another great year. So we'll talk about, I'm a shooter in the finance game, my portfolio moves. Talk again a little bit about Ukraine, obviously. Talk about basis points. Got a bunch of talking points for finance. So first and foremost, what am I doing? What have I done since the last video? I'm definitely buying. Why on CNBC? Why do you call Jim Lebenthal Farmer Jim? Not sure. I don't know if he's an actual farmer or not. But Farmer Jim's going all in. I think that's a pretty good idea. But just my actual actions. What have I done? I've added to all my positions pretty substantially. I can only have two or three that I really care about. I have 9,500 shares of NMMD, which at current liquidity is worth right around $9,880. So about $11,000 on that. I have added to Carnival Cruise Line. I have 400 shares at $18.85. So current price is worth about $6,800. I have opened a position on Norwegian Cruise Line. I have 500 shares at $18.43, so that is worth about $8,600. And so again, my position sizing is always based on the conviction of the trade. Leisure travel will come back at some point. Again, the pandemic's doing much better. The numbers on there are much better. And so again, with the 7% investment maturity, 25 multiple, 5 multiple, 1,000 multiple, what matters? It doesn't matter is that everyone's immature and they're all going to trade like a herd of people. So very confident on the reopening cruise lines. So I have total about 15,000 on cruise lines and about at current prices and about 9,000, 10,000 on MNMD, which is a longer term investment. Right, 10,000 shares. It ever hits $100, that's $1 million. It's right around $1. So why would I not take that? And again, the industry on that is extremely solid. So was that today, tomorrow, 3 years, 5 years? I don't know. I'll update you when that's worth $1 million. But also, I'm buying a pizza joint. I got a phone call. It's 3 o'clock right now. Got a phone call about 4:30. Hope the video won't be uploaded by then, but it'll be uploaded pretty much right after that. But fuck it, I'm gonna buy a pizza joint. It's like under non-disclosure until I buy it. But yeah, I'm gonna buy it because fuck it, fuck it. But again, I'll probably pay $200 to $250. Get cash flow of $200 to $250. So. How do I think about that? I'm a shooter in the finance game. Those are my moves in my portfolio. And again, like I said, I have substantially more cash than that. $250 on a business. No, I'll probably get it for $220 to $230. We'll see. But past that, again, if I buy a business and have taxable returns and I own the business, then I don't have to buy a house in full. So I'll probably put maybe $100,000, $150 on a house. Maybe just keep renting. I don't like moving that much. I move basically infinite money elsewhere. So again, the whopping half a ticket I have is for like, how do I make cash flow until people stop breaking the law internationally and intergalactically? So just fuck it, just make a play. Who cares? So I'm definitely gonna buy the pizza joint. So how do I think about 7.5% inflation from a personal allocation standpoint? If I have $100,000 and I lose 7.5%, I'm going to lose $7,500. So my buying power would be $96.5 or something like that. But I don't. Again, this means nothing to me. Right, okay, so I'm going to go buy a stock and it decreases 40% in 3 months. Congratulations. You just lost 40% instead of 7%. Additionally, I'm never looking for a stock trade and saying, I hope I make a whopping 7%. So again, cash I have half a mil. So 7%, $35K, $40K. but then I go make the right stock trade and make 40% in 3 months. It's an irrelevant number to me. So really the inflation rate does not affect my personal allocation. It just doesn't. Position sizing with mostly cash in my approach. Again, once I close on this pizza joint, again, the profit margin's looking at about a little over like 15, probably 18% should clear me about. Not gonna give you the exact numbers because I'm under confidentiality. I'm not going to tell you the numbers, but should profit about 230 to 250. So again, that would open up every other trade I've ever wanted to do ever, because I would actually have risk tolerance. But once I close on that, I will go much bigger on MNMD and the reopening trades. Reopening trades I expect to profit from sooner. The MNMD, the Mind Medicine, could be anyway, like 1 year, 3 years, 5 years, 10 years, but I see that as both of these as inevitable. So why did I add Norwegian Cruise Line instead of just adding more CCL? Again, because the investment maturity at 7%, I think seculars will trade proportionately. Cruise lines, airlines, banks, as you see on CNBC every day. Just a little diversification in terms of, again, like I said, I'm going for a double or a triple on these ones. I don't see these as big. Like MNMD triples up, I might take a little profit because I have, again, a sizable position. Again, 500,000 cash, if I lose 35,000 and I make 35,000 on a stock trade from inflation, why would I not take a little bit of profit there and again let 5,000 shares ride for the longer term? So again, that's really my approach overall, is hit a double, hit a triple, multiple, triple up, take 70% of your cost basis out of the trade and then just hold the shares indefinitely forever. And just see what's the next thing that launches. But no real big, I guess Carnival Cruise Line, I guess, was more like family oriented, and Norwegian was a little slightly different market. As a trader, that doesn't mean anything to me, but I would just like to own more different companies, right? They're both trading right around today, like the low 17s. So the price is the same. I'm pretty sure Carnival Cruise Line's valued higher. I think it was like 22 billion, and Norwegian Cruise Line was like 11, literally going off the top of my head. So I just want to have more diversification, and I expect the sectors to trade completely in lockstep. Buzzword. Lockstep. I keep hearing it on CNBC. Make sure it's a rolling. So Jay Powell, the big homie Jay Powell at the Fed, fucking up the check with the money printer go burr, 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 burr. Will suggest and support a 25 basis point hike in March. What the fuck does that mean? Example. What basis points? Right? 10-year, this is exactly what they'll show you on CNBC. A 10-year treasury note has some random numbers that says 101.3438, and the yield on that note is 1.7%. So I have a bond. I give you a dollar bill, and I say, here's how much dollar bills you have to give me back. If you have to give me $1.10 back, that's 10% yield. That's 10% return. It's 10% interest rate. What is that number? The 101. 25%, 25 basis points. So they're talking about this number. What the fuck is that number though? Like, where does this come from? As opposed to the S&P 500. Right, again, whatever it might be at 43, 42, 41, whatever today. How is the S&P calculated? Oh, I should have had this pulled up. God damn it. How is the S&P calculated? The calculation takes the number of outstanding shares of each company and multiplies that share by the company's current share price. That's market capitalization. So if you did that, there's some sort of weighting. I'm going to really try to find the metric. But again, should have had this pulled up. Obviously, I don't give a fuck. But again, there's Investopedia with everything. But they so my point is 4,300 would be there's some sort of weighting. They put some sort of if you took market capitalization of every company in the S&P 500, it'd be way more than 4,300. So, but my point is that there's a calculation there. Share price times shares outstanding. That's your market capitalization. and then you modulate it with some sort of divisor to get $4,300. So that is a very clear. Again, when you say that the Dow Jones or the S&P has moved, the Dow Jones has moved 100 basis points, or the S&P has moved 30 basis points. That it doesn't make logical sense, but I get what the fuck you're talking about. When you talk about interest rates as basis points, and you move a percentage of the basis. So what is this number? 101.3438 what? I give you $1, the base of an interest rate is the currency, is the risk. I'm going to give you some money, you're going to owe me some money back based on what I think is reasonable. So genuinely, legitimately no idea, in terms of interest rates, in terms of debt, what the fuck this number is. Calculation for the S&P or the Dow Jones, it doesn't make logical sense, but I get what you're talking about. Legitimately no idea where this number comes from. So it could be me, doubt it, but again, when I listen to it, it doesn't mean anything. If you said down, up, 360, go, right, left, now, black holes. Again, I heard some words, do not know what the fuck you're talking about. As somebody who watches CNBC legitimately all day and does finance legitimately all day. And I think I'm pretty competent at stuff. Again, not sure. Haven't got my stamp of approval from the rest of the species yet. Snowflake plunges from 100 times sales to 25 times sales. Price per share went from $3.60 down to $2.10. Again, the high multiples on all the big techs I think will modulate, will come down a little bit. Still have legitimately no understanding of what's a reasonable trading multiple, literally at all. Risk reward, it makes way more sense in terms of than absolute value in reference to financial pricing. It's worth whatever somebody will pay for it. So again, those numbers mean nothing to me, but I was short Snowflake against an intraday trade for a very small position earlier in the year. Carl Quintanilla is 5'9", and Jim Cramer is 5'6", LOL. They're always sitting on the chairs, and I saw Carl Quintanilla stand up, and I was like, oh, this dude's gotta be pretty fucking tall. So I Googled it, he's only 5'9", and Jim Cramer's 5'6". So we have another shrimp alert, Jim Cramer. He's officially a shrimp. 85% of portfolio managers are underperforming the index. A guy named Barry, he's on the Compound and Friends, on a portfolio rescue episode with Duncan and I forget the other guys' names. And then sometimes Josh Brown from CNBC. So I like that channel. That channel's going pretty good. They got the 100,000 subs. Shout out to the Compound. But why does that happen? Because sentiment. 7% of investor maturity. Oh, Billy just came out of Harvard. Oh boy, he got a super MBA. He's got a nice suit. He feels great. He's got a nice letter font on a letter type stock paper on his wall. He's super smart. Then he has to go manage money, and it's the same shit. So that does not surprise me, meaning that most people think they get one win, they think they have some secret formula, which we've talked about for years, and it doesn't exist. So that's why 80% are underperforming the index. Again, performing the index, I would never even buy an index. Like do some research. But what's the value? And sub-clause, I have the value of public speaking and writing. They're talking about knowing your audience. Yeah, I think they're just talking about underdeveloped investors. But your underdeveloped investors are 100% of the time, not 99%, 100% of the time going to respond to sentiment. 100%. 100. So time frame for Russia and Ukraine resolution. As a trader, I'm making a bet probably less than a year. In the super short term, I don't think it's going to resolve. Vladimir Putin, fuck you. Fuck you. You want to talk about a world leader? I am the world leader. And so let's just see some fucking dumb shit like this, man. Not happy about it. So that's what I get. Super 2-3 months, I doubt it. 6 months to 8 months, I expect it. But again, seeing they was going to do some talking points on language series, but seeing bombing a nuclear site, that's good. That's really what we've done. Well, again, we want the nukes to go. And again, civilization of the many alien species that I directly interact with. Fuck humanity. Fuck the entire thing. If you do not live here, blow this whole shit up. That's my vote at the Federation. For real. People can't change, fucking die. So yeah, blowing up a nuclear silo is not good for anybody. And what the fuck is humanity doing? So that's my market minutes for today. Again, I'm always doing this. I got another poker episode done, some talking points, some stories, the usual. I'll be back tomorrow. See you then. I'll let you know I'm gonna get this pizza joint because again, I still don't have constitutional rights. I gotta make a play. So let's fucking get it. Thank you for watching Financial Trading Basics, part 35, Market Minutes 4.